Greetings and welcome to another video. I am speaking to you from the forest of prosperity, and it's a wintry forest today, so we'll be trudging through the snow. Today we're going to go over the top 6 gold ETFs of 2022. And we're going to go from number 6 all the way to number 1, so make sure you stick until the end so you know what's the best gold ETF to invest in 2022. I think it's important for us to spread the message and help people learn about investing and finance and business and self-improvement, which is what this channel is about. So please like this video, comment your thoughts on gold and your questions on gold, and if you haven't done so already, subscribe to the channel, because all of these actions help me and helps the video with the YouTube algorithm so that we can reach more people and help more people learn about things that can help them with their finances, with their business, or in life. So please do so, and we'll get on with the video. So I think that one of the best options in investing in gold is by investing in gold ETFs. And this is because of its high liquidity. It's really easy to buy and sell in the open market, and that makes it very convenient. If you're not aware, or if you don't know what an ETF is, a ETF, which stands for Exchange Traded Fund, basically is a basket of securities meant to track a certain part of the financial market. So for example, there are industry ETFs like technology ETFs that track technology stocks, mining ETFs that track mining stocks, and then there are also commodity ETFs like the gold ETFs that track gold prices. And how gold ETFs work is that these ETFs consist of funds that own gold, basically. And when you're buying a share of this ETF, you're buying a share of their assets, which is just gold. And when you are evaluating ETFs and which ETFs to buy, there are really two things you should be looking at. One is expense ratio. So expense ratio is the operating expenses over the average assets under management. And what it tells you is how much of the assets in the fund is being allocated to operating expenses. And this tells you how costly the ETF is. You want a ETF with a lower expense ratio because it means that they are able to manage the assets at a lower cost. The other thing you should look at when evaluating ETFs is whether the ETF uses leverage or not. You want ETFs that don't use leverage, because leverage means borrowing money in case you are more of a beginner, and it involves more risk. You don't want ETFs that are riskier, because that just isn't good for your investments. You want less risky investments, and ETFs that borrow a lot of money can create a lot of risk for you that you don't want. So look for non-leverage ETFs or ETFs that don't use a lot of that leverage, and that is what you should be looking for. So now let's get on to the top 6 gold ETFs of 2022. Number 6 would be SPDR Gold Shares. This is the biggest gold ETF, and it's one of the most famous ones. It has about $58 billion of assets under management, and its expense ratio is 0.4%. Moving on, the number 5 top gold ETF would be the iShares Gold Trust. So this is actually the second biggest gold ETF, and it has about $28 billion of assets under management. Its expense ratio is 0.25%. So it's lower than the SPDR Gold Shares ETF, which means that it's a less costly ETF. It takes less money to operate this ETF, so you'll get more value for your investment, which is why it's number 5. The number 4 gold ETF is the SPDR Gold Mini Shares. So this is similar to the SPDR Gold Shares because it's run by the same people, but the reason they started it is because they wanted a less costly ETF to compete with iShares Gold Trust. So they created SPDR Gold Mini Shares, and it has a much lower expense ratio. Its expense ratio is 0.18%, which is significantly lower than the main ETF they have, and it has $4 billion of assets under management, so it's also a pretty big ETF as well. At number 3, we have the Aberdeen Physical Gold Shares ETF. This ETF has $2.4 billion of assets under management, and it has an expense ratio of 0.17%. And it's a pretty reputable ETF as well, so look into it. Unfortunately, the audio malfunctioned for the rest of the footage, so I'm going to finish this video through voice recording. At number 2, we have Granite Shares Gold Trust, which has $900 million of assets under management, and its expense ratio is 0.17%. What I like about Granite Shares Gold Trust is that it explicitly prohibits derivatives, which will minimize your risk. And as far as I know, the other gold ETFs on this list don't use derivatives either, but I think it's good that Granite Shares explicitly prohibits it. So you know it's not something that is part of their strategy in the future, and that keeps you safe. You don't want ETFs doing unnecessary financial engineering and creating unnecessary risks for you. And at number 1, we have iShares Gold Trust Micro. So this ETF is made by the same people as iShares Gold Trust. It's both made by BlackRock, and it is actually created, or it was created, to compete with SPDR because SPDR is its main competitor for iShares. So iShares Gold Trust Micro has $1.2 billion of assets under management, and its expense ratio is 0.15%, which is the lowest expense ratio of all the major gold ETFs, and that is why it is number 1. So thank you for watching, and I hope this video was helpful for you. If you did find it helpful, make sure to give it a like and comment your thoughts. Comment on what you want me to discuss next, because I'm here to help you guys succeed in business, in your finances, and in life in general. Make sure to subscribe and turn on the bell notifications for more helpful content. And all of these actions help me and helps the video with the YouTube algorithm, so we can reach more people and help more people become more successful and more knowledgeable when it comes to business, finance, and life. Thank you for watching once again, and I'll see you guys in the next video.